makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, fintech, or the French, not fintech. We'll talk about fintech in a second, but the French Prime Minister Sébastien Lecornu is proposing his new budget in a cabinet meeting this hour, ahead of a crucial address to Parliament this afternoon, his first since being reappointed. Now, in just a moment, we'll be hearing from Bloomberg's Caroline Conan in Paris, but first, a new front in the trade war between China and the U.S. as Beijing announces a new round of retaliatory measures in the shipping sector. So let's get straight to Ross Matheson, our chief Asia correspondent. Ross, what do we know about the fight that China wants to have or not have?
Well, as you were saying, what we've got today is news on the shipping front, which is that China is sanctioning the U.S. entities of a South Korean shipbuilder, Hanwha. There's been a series of tit-for-tat actions, in fact, between the U.S. and China over shipping, because the U.S. wants to bring shipbuilding manufacturing back to the U.S. China is keen, obviously, not to lose market share. This is a key industry, obviously, for the global trading industry. It's interesting to see this bubbling up now, though, because a lot of the focus has been on critical minerals, rare earths, the high-tech sector, chips. This just shows that the tensions in this relationship on the trade front, they run deep and across multiple sectors. And also we're seeing this come up potentially as positioning again, all this negotiating before a potential meeting between the presidents of the US and China. You've got China threatening things, the US threatening things. They're all getting in their corners, in their strongest position to potentially have this conversation. For now, the US Treasury Secretary Scott Bessent says he does believe this meeting will go ahead between Xi Jinping and Donald Trump at the end of the month in Asia. Of course, for each leader, there's got to be that calculation up to the last minute. Does this meeting make sense? Am I going to get from this meeting what I want? Are we going to get tangibles from it on the trade front? So until they actually walk into the room, we don't know what's going to happen. But it does seem a lot of this is this kind of positioning, getting into strong positions before the two of them potentially sit down later this month in Asia.
Rose, thank you so much. I mean, the other big story is France. Sébastien Lecornu will address Parliament for the first time as Prime Minister this afternoon. I mean, for the first time, the second time round. The address will be a make-or-break moment for his fledgling government in its efforts to pass a budget and bring some political stability. Let's get more with our very own Caroline Conan in Paris. So, Caroline, if Lecornu does not deliver his message, what happens?
Yes, Francine, I do feel like it's Groundhog Day as well, living the same day over and over again. And again, today it is the moment of truth for Sébastien Lecornu, who was supposed to deliver his general policy speech a week ago, but then he resigned after the rebellion from the Republicans before being reappointed on Friday. So today he's going to deliver his general policy speech, 2 p.m. UK time. And what the socialists are calling for is a suspension of the pension reform. This 2023 reform that brought the retirement age in France from 62 to 64 years old after months of strikes and protests in the street. This is really the flagship reform of President Macron in his second term. But if President Macron has signaled some openness on Friday after meeting with all the political parties to delay this reform, the socialists want more. They want a pure suspension. They want to go back to 62 years old for the retirement in France. So Sébastien Lecornu will have to say something about this in his general policy speech if he wants to avoid another vote of no confidence, because he needs the support of at least 2/3 of the 69 socialist MPs in Parliament if he doesn't want to see his government fall again tomorrow, because the far right of Marine Le Pen and the far left have both proposed 2 motions of no confidence against this Lecornu II government.
Caroline, thank you so much. Caroline Conan there in Paris. So uncertainty in France and the return of trade war fears between the world's 2 largest economies is gripping the markets. And I have to say, it's not great news for them. Let's bring in Craig Cameron, head of European Equities at Franklin Templeton. Craig, thank you for joining us. I have to say, I've been speaking to Italian officials that aren't delighted about what's happening in France, but at least it makes them look good. So I don't know whether there's a tactical play or whether actually this fight between China and the U.S. will take everyone down.
Yeah, I think, look, the French situation is obviously something that needs to be resolved. So whether we see changes in tax rates or we're going to get some spending cuts, ultimately I think something will be agreed and we can all then move forward. I think what we try to remember here is that the French companies in particular are global and international. There's many great businesses there, and they're actually largely immune from sort of the domestic challenges that we're seeing in France. So, while it's never easy to see these sort of situations occur, and as you say, it's an interesting comparison relative to the countries like Italy in the past. Yeah. Ultimately, these things tend to get resolved.
Craig, I mean, overall, look, valuations are not cheap, or certainly a lot of the stocks in Europe and elsewhere could be priced to perfection. So where do you find value? Do you worry that there could be some kind of correction coming that just takes everything down?
I think you've always got to be aware that if something does happen, Europe is not immune. It's not immune from the US-China challenges. It's not immune from a reset in valuations. I think where we see opportunity is in the fact that Europe itself remains at a meaningful discount to global markets, particularly countries like France today. I would also mention the UK really are trading in line with their long-term averages, despite being I would say in a sort of higher valuation market. So those are the areas that we find particularly interesting. What
do you do with defense? I know there's actually a Bloomberg, there's a BloombergNEF Green Summit later today, and I know some parts of the European Union are at pains in trying to maybe spend some of the defense and matching green. I mean, do you see opportunities in defense more than anywhere else in Europe?
I think from a valuation standpoint, the market has really priced in a lot of that already. So, I'd be reluctant to say that defense is a great opportunity here. I think actually the converse is true. You mentioned the green spending. It's really an area that continues to develop. It continues to grow, but we haven't really seen that enthusiasm that maybe we did in 2021 or 22 around that kind of theme. So, I think both of these are absolutely necessary, and you speak to a broader point, which is that Europe is investing in fiscal stimulus for really at a level that we've not seen in a long time. And I do think that supports the European equity markets relative to global.
Craig, when you look at, some of the, what's happening with China, so I think there was a big accusation also from the Treasury Secretary. China's probably trying to destabilize. My words, not his, but that was the gist of what he was trying to say. How problematic is that for European valuations and European markets?
So I think all of this is interconnected. I mean, Europe is more impacted by China than the US is, but I think from a geopolitical standpoint, Europe sitting in the middle of that sort of fight and staying out of it is clearly helpful. If you look at Chinese companies looking to invest overseas, I was reading this morning about BYD looking at another factory in Europe. Clearly, Europe is more preferential than the United States for those kind of businesses today, and as that comes through in the numbers, I do think that's a positive for Europe.
What does that mean there's a lot of Fed expectations. If the Fed suddenly turns more hawkish, does that change your view or impact your view on European equities?
So I think that the sort of attractive thing about European equities is we are in this falling inflation, falling interest rate environment that the US is not in. That has supported equities, but it also would argue for that valuation discount to close. So certainly for companies globally, a declining interest rate at the US Fed is helpful. But I think what's most important for Europe is the ECB rates and the environment that we operate in here in Europe. So less meaningful for Europe than the global economy overall.
Okay, Craig, thanks so much. Craig Cameron there, head of European equities at Franklin Templeton. We're seeing a little bit of a correction. The Hang Seng Tech Index falling some 11% from its October high, which means it's entering a correction. Coming up, it's a venture that uses electricity to shatter rocks and make mining more efficient. We speak to Robert Friedland, Canadian mining billionaire and iPulse founder, with Maximo Pacheco, the chairman of Codelco. It's going to be a good conversation, so stick around. This is Bloomberg. Welcome back, everyone. Now, Codelco has acquired a stake in a Robert Friedland venture that uses electricity to shatter rocks as the Chilean copper giant seeks to make its mines more efficient. Well, the state-owned Codelco joined other miners such as Rio Tinto, Newmont, and Teck Resources as investors in the U.S.-based firm. Well, I'm delighted now to be joined by Robert Friedland, Canadian mining billionaire and founder of iPulse, and Maximo Pacheco, chairman of Codelco. Thank you both for joining us. This is an exciting partnership. Give me a flavor of actually what the nature of the partnership is, Maximo. I mean, it's quite rare that Codelco enters in these kind of partnerships. So what did you see?
Well, we are partners nowadays with BHP, Rio Tinto. We are partners with Teck, with Anglo American, with Freeport in Chile. So now we are partners with iPulse and Robert Friedland because Chile owns the largest copper reserves of the world. And we know that the world needs a lot of copper, but we need to be competitive. We need to produce it with less energy. We need to cut our costs and be sure that we can supply this market at the right cost. So that's why this will only be done with innovation and new technologies. So that's why we are partners now with iPulse, because we believe that they are leaders in something that will change the shape of the mining world.
So, Robert, how would you explain pulse powered? I remember actually meeting you in Qatar, in the corridors of the Qatar Economic Forum, and you showing me how this worked. This is something that you've always believed in, but what are the applications in the mining world?
Well, Francine, it's great to be back here with you on a show called The Pulse, because our company is called iPulse. So
who came first? No one.
In the entire known universe, this is the best place to explain pulse power on a show called The Pulse. So we're compressing electrical energy, and among other uses, we're using it to burst rock or tear it apart from the inside. For all of the history of humanity, we've crushed rock from the outside, squeezing rock into little pieces. Now we're pulling it apart with electromagnetic pulses. So it's a much more efficient way to get the metal out of the rock. The act of crushing and grinding rock is using roughly 4% of all the electrical energy in the world. Mm-hmm. So it's a green technology, and it results in higher metallurgical recovery. And we've been developing that technology for some 19 years with assistance from the French government, even though we're an American private unicorn.
What, Maximo, at what valuation did you buy into the iPulse, and how much do you own?
Well, this is an equity stake that we've taken, and we will be commenting on this hopefully in the coming weeks. But it's a significant investment for Codelco. Yeah. We're committed to innovate, and I think this is the best way to do it, with partners.
How much do you want to grow this company, Robert? How big do you think? I mean, I'm going to, try and ask about valuation, but how big, what's next for iPulse?
So there's three fundamental ways to use electrical energy. There's direct current, which Thomas Alva Edison was a big fan of, alternating current, which was Nikola Tesla and George Westinghouse, and there's pulse electrical power, which has been confined mainly to national strategic weaponry and weapons. But we're dumbing down technology. In the military, pulse power is used at terawatts, and we're just playing with gigawatts, the power output of a nuclear power plant, approximately. And the applicability is very broad, not only in mining, but in manufacturing and a host of other industries, even in agriculture.
So what are some of the other tangible benefits of this technology? I mean, Robert was explaining a little bit of the convenience, but how much does it cost, for example, to produce a ton of copper compared to traditional methods?
Well, I mean, it has a huge impact in our energy efficiency, and we are very obviously intensive in energy. And also, this has a great impact on sustainability. This is environmentally more friendly, the way we can use this technology, not only in developing our mines, but also in exploration. I think Chile, as the largest reserves in the world, is a country that's underexplored, and we need to increase exploration, because that's how our business starts. we start our business with exploration. So a technology like the one that Robert has been describing is very, very strategic for exploration and therefore for finding new mines. This business is not only about buying other assets or buying other companies. It's primarily about finding new resources and new reserves.
And I imagine that's much cheaper than the current methods that you had.
Absolutely. It's not only much cheaper, it's more efficient. You can go deeper because in the past we could find copper very close to the surface of the earth.
Yeah.
But copper now has lower ore grades and it's deeper in the earth.
Yeah.
So we need to explore and we need to drill deeper today. And that's how this technology will help us to find new resources.
And Robert, will it, how much does it cost to deploy this kind of technology, and will it get cheaper?
First thing we want to tell you, this magnificent studio runs on copper. And all this big
everything
data,
runs on copper.
AI, the world runs on copper. And the price has to be low enough that humanity can really achieve uplifting 7, 8, 9 billion people on this planet. So the mining industry has been very slow to innovate. With 19 years of innovation, we're changing the fundamental way that we get metal out of rock, not only for copper, but all other metals. You've been seeing news about critical raw materials on the news every day. So we're tearing the rock apart. We put huge shock waves. We put the rock in a bath of water. We put enormous shock waves through that water. The rock just pulls apart and liberates the metallic particles. That can be scaled to produce more metal for the world at much lower cost. Otherwise, the industry is going to have real problems finding the copper needs. We're going into deficit in future years. The world is not producing as much copper as it needs. Codelco has enormous lower grade resources that become ore, that become profitable, but you have to reduce the energy consumption in the act of mining. And it's that very copper that we're mining that you need to produce energy.
I mean, the numbers are mind-blowing. I think about, 5% more or less of the world's electrical energy is used for crushing rock.
Isn't that incredible? To give you an idea, the amount of energy that we use as human beings to crush rock exceeds the amount of energy for all the world's aircraft flying around. And we're worried about efficiency in aircraft as well.
Let me comment probably that we had the numbers for the first semester of this year, where the main source of power generation in the world now is our renewable energies. It's 35% of all of the power generation in the world comes from renewable energy, and 34% is from coal. So if we want to continue having renewable energy, that uses a lot of copper as well. And renewable energy needs copper. So if we want to speed up the energy transition, we will need also more copper.
Maximo, what's your outlook for the copper industry?
Well, it's obviously a very challenging moment because probably last year the main issue for the copper industry was geopolitics. This year, we are now in London Metal Exchange Week. This year, the main issue for the copper industry is operational continuity, because it's becoming more and more challenging, more and more difficult to find copper and to develop copper mines. So we are at this stage facing a very challenging moment where we need to bring more innovation so as to make sure that we can have more copper.
And Robert, I mean, you think this is a revolutionary because also it decreases energy consumption by 80%. Are there any other new technologies that you see innovating the mining industry?
Nothing to compare to this. We're in a desperate position for mining metals in the world. We've mined 700 million metric tons of copper in human history. And we could get it back if we tore down this studio and all the buildings in England and Europe and the United States and China. We get the copper back. But at the rate that we're consuming copper, our industry has to mine as much copper in the next 18 years as we mined in the last 10,000 just to maintain 3% GDP growth. We won't get there with the old way we've been mining. The industry has to innovate, and we need a real step change in energy savings and a greener, more sustainable way to mine. And that's what we've been working on in this company for about 19 years.
Do you think this significantly changes the future of the mining industry, and how much faster can you find and mine?
Well, I mean, on one side, we can see a very healthy and robust demand for copper. You just mentioned renewable energy. It's about electromobility. It's about AI. But on the other side, the supply of copper can grow at rates of 2-3% per year. That's what we have seen. It's very difficult to develop a mine. It takes more than 10 years. So it's long planning, it's a lot of perseverance, patience, and therefore we require to be very, very disciplined in this if we want to increase copper production. I remember last year when we visited the LME week, people were commenting that there was going to be a small surplus of copper in 2025. 2025 is almost over, and there is no such surplus in copper. It's short. We are short. You have seen a shortage in copper supply precisely because of the operational continuity issues.
Yeah, I remember having the former head of commodities at Goldman Sachs saying, we're running out of everything. Robert, what comes next for iPulse? Are you going to sell this technology to others, or is this, for the moment, are you focusing on Codelco?
No, BHP is a shareholder. They're the largest miner in the world, as is Rio Tinto. We saw them yesterday during London Metals Week. Teck Corporation, who's talking about merging with Anglo as a shareholder. Newmont, the largest gold producer. But Chile is the biggest copper endowment in the world. All the easy copper has already been mined. We have to go deeper. We have to mine lower grades. The Democratic Republic of Congo is now the second largest producer of copper. These two countries have the best endowment. Peru also has some challenges in growing production. And we just want to tell you that you want to keep the lights on this planet. You need copper metal, and somebody has to get out there and find a better way to do it. iPulse will be at the very forefront of disrupting technology to find the metal by injecting electrical energy into the earth and lighting it up at depth so we can see it non-invasively, then crushing the rock, grinding the rock, and then we're going to go into driving tunnels underground, and then geothermal power, all from the same core technology.
There you go. All our viewers are now mining engineers. Thank you both for joining us. Robert Friedland, founder of iPulse, and Maximo Pacheco, chairman of Codelco. Coming up, trade tensions flare once again between the U.S. and China. Dambisa Moyo from Versaca Investments joins us next to discuss the macro outlook. Global equities actually falling as China's upping the ante on its trade dispute with the U.S. This is Bloomberg. Good morning and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Trade tensions reignite between Washington and Beijing as China sanctions the American units of a South Korean shipping giant and threatens further measures. A pivotal day in Paris with newly reappointed Prime Minister Sébastien Lecornu facing Parliament in a high-stakes address that could define his political future. Plus, President Trump calls it the dawn of a new Middle East, but questions remain over what happens next following U.S.-led efforts to end the fighting in Gaza. Now, major U.S. banks kick off earnings season today with J.P. Morgan, Goldman Sachs, and Citigroup all expected to post strong earnings in investment banking and trading. Well, Charlie Wells is here to discuss. Charlie also has a new book out, which we'll talk about in a second. But the overarching narrative going into earnings season for banks is what, Charlie? Good morning.
Good morning, Francine. That's a great question. And look, there are high expectations going into this season. We can see that reflected in the share prices here. You've got that KBW Bank Index of major U.S. lenders outperforming the broader market over the past year. I want to bring up a number that helps animate why this is happening. It's $1 trillion. That is the value of deals in the third quarter. And the investment banking units at these banks have been able to clip fees off of that deal volume, which has been really helping them on that front. But I want to present a little bit of a canary in a coal mine, too, because we can't get over optimistic here. If you look at Jefferies, they reported their best third quarter earnings as far as revenue a few weeks ago. A little bit of a foreshadowing here because there are concerns, despite that great number, of the exposure that they've had to bankruptcies in the auto sector. So some red flags out there for analysts as we start hearing from these banks.
Yeah, and Charlie, people are obsessed with the state of the global economy. So what can, if you glimpse into earnings calls with like Jamie Dimon and the like, what can we expect to hear from them on the economy?
So look, we've got Mike Mayo, the veteran analyst at Wells Fargo, talking about how that forward trajectory is going to be incredibly important, particularly at this point when the U.S. government is in shutdown. So we are not getting those data points that we otherwise would. In this context, some of the numbers that we may get from these big investment banks could help fill in some of the gaps there. But really, despite the fact that some of these prints may come in incredibly strong, Mayo talking about how it's that forward trajectory, the guidance that they give, what it looks like as far as tariffs, as far as the shutdown, as far as that larger economic picture, that is really going to count today.
Charlie, massive congratulations from all of the Pulse team. You're just back actually from your book tour. The title, What Happened to Millennials in Defense of a Generation. I loved it because it's a little bit of a love letter, to millennials who sometimes get a hard time.
Francine, thank you so much it's so great to be back. Thank you for having me. And look, this is a book that in some ways is an extension of the sort of reporting that we do at Bloomberg, where we look at how some of the big data points, how some of the big numbers, how some of the big trends are flowing into the lives of everyday people. So I spent 4 years, hundreds of hours interviewing 5 millennials from across the United States, asking them about how some of these big trends have factored into their lives to get a sense of how America's largest living generation has fared over the past 25 years.
If only I was a millennial. I'm so much younger. So, Charlie, that's why I never got into your book. Thank you, as always, Charlie, and welcome back. Charlie Wells there, newly minted author. Now, renewed China-U.S. trade uncertainty continues to linger, unnerving markets. Today, new U.S. tariffs come into effect on imported timber, kitchen cabinets, but also upholstered furniture, much of which comes from China. Dambisa Moyo, principal at Versaca Investments, joins us now. Dambisa, always great to speak to you. You're also an author. I feel like I'm surrounded by greatness. When you look at U.S.-China, it's actually unclear what China and the U.S. are playing at.
Yeah, so I guess I'm fundamentally optimistic that directionally the U.S. and China will continue to engage, will continue to forge ties. I think obviously it's very bumpy right now. The tariff story is ongoing. The issues around critical minerals, as you've highlighted, and there will be some tit for tat. But if you think about this year, there've been a number of meetings with high-level meetings on trade, on more integration, on semiconductors, and so I'm fundamentally bullish in terms of the long-term and progression in terms of that type of relationship. There's far too much integration in terms of debt, in terms of trade, in terms of consumers. And so I feel fundamentally it's the right direction, but it might be a bit bumpy.
Dambisa, I feel like sometimes, having these conversations day in, day out, almost on an hourly basis, we miss the overarching trajectory, which is, has the Trump administration actually achieved what they set out to do? They want a weaker dollar. I mean, maybe they're getting it. Are they getting back what they want in terms of tariffs?
Look, I think there's economists need a bit of humility because many economists like myself who've been traditionally very globalist, we've been wrong in terms of tariffs and the border closures. We were certain that was going to be net inflationary, and it just hasn't happened. I mean, the country is growing at 3.8% in the last revisions from Q3. The numbers in terms of economic progression, in terms of sentiment, continue to just be reaching new highs in stock markets, continues to be net positive for the country. Now, I personally don't think we're out of the woods. It just seems that the policies seem to be defying canonical models of economics, and so there is a narrative that says next year we'll have loose monetary policy, loose fiscal policy, plus higher wage pressures because of the border closures, plus tariffs. All of that could be net inflationary, and then maybe we see a turn in terms of the mood music on rates.
So why is that, Dambisa? Because first of all, it's very rare to be able at this point to say, look, maybe we got it wrong.
Yeah.
But is it because the supply chains had already moved?
Yeah, so I think there's a number of things, and I think the word the U.S. economy being resilient is perhaps is overused, but I think that's very telling. The balance sheets of the households have held up. I think a lot of the absorption, as you said, with respect to supply chains that already happened, companies that already pivoted post the pandemic, and so I do think that a lot of the expectations as a shock to the system just haven't been felt. And the other thing, obviously, is that many corporations have been able to absorb absorb the threat of tariffs. Of course, we don't want to see tariffs above 20% or 30%, but the 10% tariff in terms of margin, I think many companies feel like that's something they can absorb.
Yeah, is there a danger that maybe actually we think that we're fine, but it gets, it's the pressure cooker, that there's going to be one thing where it's just going to be too much for companies?
Yeah, look, I think that the fact that there's a lot of risk in the system is something that I've been writing about recently. There's risk in the shadow banking system. There's a lot of risk with the new 401k announcement from the government and what that means for the ability for pension funds and for retailers to be able to take on more risk. I think all of those are risks in the system that could be very impacted if the rates environment changes. And as I said, there are a number of factors that suggest that we could see more inflation tick up in the year next year.
What does fragmentation look like? Again, we talk a lot about these big words, the New World Order. It's reimagining ally countries. On an economics term, what are the consequences of it? Yeah, look, I think that it's clear that there's a lot of fracturing going on. I mean, my worry is that a lot of the fracturing is not just happening between the sort of developed and developing countries or the U.S. and China, but also within the developed nations. If you look at the U.S. versus Europe, the European story is pretty much heavy regulations, very slow growth, continued high energy prices. That is not the U.S. story right now, and I'm worried that if not, dealt with very aggressively, many European countries could miss the new super cycle of AI, and that's my great concern right now. Do you also worry about valuations? Again, AI, it's unclear who the big winners are, how exactly it changes, at what pace it changes the work we do, but also they really do seem priced to perfection. Yeah, look, I mean, how can you not be sort of paying attention to the valuations? If you think on a historical basis, multiples traded around 16 times. We're now at 25 times. You look at the extremes like an NVIDIA or even a Tesla, who are at 200 times forward PE. I mean, that's obviously eye-watering. But you start to think about what is that really telling us? That's telling us that there's a lot of expectation around productivity gains. I think we haven't yet seen a lot of that productivity gains flow into corporations, but there is upside. I'm not yet worried. I still think we're in the early innings, maybe 96, 97. If you looked at the e-commerce or the .com bubble as an analogy, I don't think we're near the sort of the 2001 concern about a bubble about to burst, and that's a lot to do with the fact that institutions are still net neutral and haven't really jumped into the euphoria that we're seeing today. Dambisa, how much do you think about, we're putting so much money in AI, and it depends on how much you get the return on investment, how quickly you get that. So once you start to see a return on investment, then maybe if we're not out of the woods, it just makes much more sense for companies to keep on piling on. Yeah, look, I think there's a study by MIT NANDA that came out about 6 weeks ago saying that, a lot of the pilots, 95% of the pilot programs that have been run by corporations is generating 0% in terms of return. And I think my sense is that to the extent that there will be gains, I'm optimistic that there will be gains, but I think they're much further out into the future than we might be expecting and perhaps what is priced into the market right now. I do think that there's a long way to go, and it's still going to be much more interesting to see how it actually permeates, how it's distributed, how you think about applications, and that's not something that's in the mind's eye as yet. Does it make a difference on our economies if it's the U.S., if we're in the so-called technology war between the U.S. and China? Does it make a difference? Who wins? Yeah, well, look, I think I hope we both win, and there's some sense of sort of cooperation in this space. I do think that just in terms of transparency, in terms of the rule of law, in terms of the democratic values, and you want the U.S. to remain very aggressive and very competitive, and they obviously are leading with estimates of $300 to $500 billion in terms of capital investment from the AI, sort of led by the hyperscalers. So I am optimistic that the U.S. can continue to compete, but of course China is not far behind, and in some instances is actually leading too. So we have to remain very, very sort of animated and energetic about that competition. Dambisa, thank you so much. I love always speaking to you. Dambisa Moyo, their principal at Versaca Investments. Now, Broadcom has become the latest chip maker to forge a blockbuster data center deal with OpenAI. In the most recent wave of AI infrastructure deals, OpenAI has agreed to buy custom chips and networking components from the chip maker. News of the pact sent shares of Broadcom soaring, adding more than $150 billion to its market value. Volodymyr Zelenskiy plans to meet Donald Trump in Washington on Friday. Now, the meeting between the Ukrainian and U.S. presidents follows 2 phone calls over the past week. Zelenskyy is pushing to secure more air defense systems to protect energy assets after a series of Russian strikes triggered power outages across Ukraine. Well, President Donald Trump has laid out his vision for broader Middle East peace following the success of U.S.-led mediation efforts to end the conflict in Gaza. Trump signed the Gaza agreement alongside world leaders in Egypt.
This is the day that people across the region and around the world have been working, striving, hoping, and praying for. They have done things over the last month that I think were really unthinkable.
Our Jumana Versace is in Dubai. Jumana, momentous day. What was achieved?
It really was. President Trump basking in the glory of what happened yesterday. The Gaza peace signing ceremony was how the day ended. And of course, he had traveled earlier in the day to Israel, received a hero's welcome there, addressed the Knesset. Everyone from all sides of the political spectrum are very thankful for the effort and momentum that the Trump administration had put into getting this deal across the line. And then he managed to gather some of the biggest leaders from around the world in Sharm el-Sheikh in Egypt for that Gaza signing ceremony. There you're looking at images of him quite literally having these leaders line up one for one for photo opportunities with him. So a huge diplomatic breakthrough. But of course, let that not take away from the substance of what was achieved, which was a major human day as well, with the return of the hostages reunited with their loved ones, with the return of Palestinian detainees alongside prisoners, with the cessation of hostilities and the resumption of humanitarian aid into Gaza. The big question from here, Francine, is how you can keep up this momentum, the focus from the international community, and take this ceasefire, this truce, and turn it into something more long-lasting.
Yeah, Jumana, how fragile is the ceasefire, given many details are still left to be worked out?
I think there's hope at this point that the ceasefire may lead to something more permanent. And the key is that word momentum and the fact that President Trump is appealing to the international community, to world leaders, to keep the focus on, i.e. this, from yesterday's perspective, is no longer just an Israel-Gaza or Israel-Palestinian issue. It has become a focus for the international community. And so of immediate concern is going to be the demilitarization of Hamas and what that actually means in effect, the monitoring of the ceasefire, establishing an international security force and the participation of some of the Arab countries with the establishment of that force, the reform of the Palestinian Authority so that a credible, technocratic Palestinian government can be set up in the coming months, and then ultimately the eventual withdrawal of the IDF from the Gaza Strip. One thing I would say, though, is when President Trump was asked about the possibility of a future Palestinian state, he was non-committal. He has not committed to a two-state solution, and that stance remains even after his 24-hour or less than a 24-hour whirlwind trip around the region. So he's not yet committing to a long-term prospect of a vision for a Palestinian state. Nevertheless, a massive, massive day in the region and undeniably a huge diplomatic breakthrough for President Trump.
Jumana, thank you so much. Jumana Versace there in Dubai with the very latest, of course, on the Middle East. Now, coming up, a global deal values topped $1 trillion in the third quarter for only the second time on record. We discuss the M&A outlook with Dietrich Becker, the president of Perella Weinberg. That's next, and this is Bloomberg. Now, the M&A market heating up, with some even claiming that the animal spirits are returning to the sector. Now, according to data compiled by Bloomberg, global deal values have topped $1 trillion in the third quarter for only the second time on record. Now, well, let's discuss all of this, the outlook, with Dietrich Becker, the president of Perella Weinberg, a boutique investment bank that advises major clients, including Blackrock and Thoma Bravo. Thank you so much, Dietrich, for joining us. So first of all, I mean, the volumes are pretty impressive. What do you think is driving them?
Well, first of all, thank you for having me, Francine. So, yes, we've seen a very active quarter. It has to be said that, we sort of immediately after Liberation Day, we had a wobble, and there was a period where not that much was being announced. And then since then, we've seen a lot of growth. The world is sort of uncertain and it's shifting right now, and we are seeing companies redefining strategy. We are seeing, people focusing on investment in certain regions, in certain technologies. We're seeing companies and sectors transforming themselves. We're seeing private equity and private credit driving a lot of that activity. So there are a lot of drivers. The financing markets are open, so deals can get done and can get financed. And so the general sort of spirit is good. But having said that, it's not good in every sector. Some sectors are benefiting from this environment a lot more than others.
Yeah. But I mean, if you put into context, so overall transactions are flat, but deal volumes are up. So what does that show?
It just shows that in highly valued sectors where a lot is going on, the big deals are happening. But you're right, overall deal volumes have not grown in the same way, and we're far away from the heydays of 2021.
Yeah. Will the U.S. activity actually shift to Europe?
So, excellent question. There are plenty of reasons why things need to get done in Europe, and obviously, that's something we work on all the time. We have seen Europe being more active, actually, and we see a lot of interesting things in the pipeline these days. So the answer is I'm hopeful. Germany, France, Europe in general have found a degree of self-confidence, I would say, in 2025 as they are looking to sort of redefine Europe's role in the world. And there are many companies that are critical to that. And so, yes, we are optimistic that there will continue to be some attractive volumes in Europe as well.
I mean, Europe is attractive, right, in terms of valuations compared to the U.S. How does that factor into M&A?
So it's an excellent point. At the beginning of the year, all of the capital was accumulating in the United States, and Europe was pretty down. We then saw a resurgence, and we saw a lot of capital moving to Europe. We've seen a lot of capital looking to be invested in some of the big themes in Europe around defense, around infrastructure, around technology. And a lot of international capital is moving, and some of it sort of is shifting, I would say, from the US to Europe. And so that in itself, I think, is going to drive some attractive volumes over the next 18 months or so.
Dietrich, I have the great privilege of being on air every day trying to figure out what's going on, and there's a lot of uncertainty. It's tariffs. Today we have US, China. How are clients dealing with this uncertainty?
Well, they're getting advice because it's complicated. But the answer is it's difficult, and it's very, very tough to be a decision maker of a global company these days. The sands are shifting every day, and the question of where you allocate capital, how you allocate capital, where you get capital from, all these things have shifted over the last, in recent years, and the market is continuing to innovate by providing different kinds of capital that then sort of helps drive some of the development of these companies forward. But the answer is strategies are changing very quickly, and as a result of that, strategy and M&A also changes.
So what can you tell us about, we look at, for example, Electronic Arts or some of these cases that have been studied. I mean, do you worry about bubbles, or do you worry actually about, a boom because you see this biggest leveraged buyout ever?
Yeah, well, look, we've seen very high valuations in a number of sectors, and there's a lot of talk these days about potential bubbles in certain sectors. The world is, in fact, bifurcated. There's sort of the very hot sectors, which are really, really attracting a lot of capital these days. AI, defense, infrastructure, energy technology. But then there are also, Electronic Arts is an interesting space. Media, there's a lot of transformation there. And so, you're seeing a lot of high valuations and a lot of activity in those spaces. In certain industrial, consumer, and other areas, it's a lot more quiet. And so those companies need to figure out how to reinvent themselves and to attract capital for their strategies.
I mean, defense is I would say quirky because it's it's technology. It's very much kind of depending on what the government also wants to do. Could you ever see M&A in that space?
Well, there's a need for M&A in that space because we have a very fragmented industry, particularly in Europe. And so now, as Europe is trying to redefine its defense strategy, it needs to also create the companies that are able to actually provide what Europe needs. there is a degree of appetite for sovereignty in Europe. That requires innovation and technology. What defines innovation and defense is currently being, completely redefined as a result of the experiences of the war in Eastern Europe. And I would expect a lot of these European companies to innovate, but also to see consolidation. I think the answer is yes, there will be some deals in defense.
So could you see big European champions in defense or even AI or data centers? Like, what can Europe be really, really good at?
Look, I think Europe can be really good in application of AI. I think that's an area where already a lot of really interesting companies are emerging. There's the whole question of who provides the AI, and then the whole question of what do you do with it. And I think that there's a lot of really interesting opportunity for application of AI and for technology in Europe. And great companies are currently coming up. And by the way, some of them are very much in the defense area. I think that the spending commitments that have been made, for example, by the German government, are attracting a lot of other capital from around the world that is going to be deployed in areas like defense and infrastructure. And so in those areas, I suspect we will see a lot of activity.
Do you worry about valuations? Do you worry actually about a bubble in AI?
Look, it's a great question, and people are far smarter than I am are debating that these days. I think that we are still in the early stages of what AI will do to everything that we do, and so there will be unbelievable success stories, but I suspect that some of the capital that's being deployed in AI today is probably not going to be generating the kind of returns people are hoping.
I think we only have time for one question. I'm debating whether to ask you what keeps you up at night or how you deal with jet lag. So maybe a little bit of both. How do you deal with jet lag? Because you travel all over the world all the time.
I do indeed, and it was a lot easier 20 years ago than it is today, but I'm very thoughtful about which flights I take. I'm thoughtful about how I eat. I drink a lot of water. I make sure that sometimes I get drips to sort of re-energize me, but there's real method to the madness.
I love that. So given you're not actually awake because of jet lag, what do you worry about?
Look, it's a very uncertain world, and I wake up every morning, I think like most people, wondering what's going to happen today that's going to shift the sands that we're all walking on, and that in itself is sort of what's keeping me up at night. I think we've come used to a world in which uncertainty is normal. It's actually pretty good for us. We're advisors that help companies work through difficult situations, and so complexity is good for the business model. But generally speaking, there are a lot of things I worry about because I have kids.
Perfectly said. Dietrich, thank you so much for joining us. Dietrich Becker there, president at Perella Weinberg, with some life advice and, of course, a good overview on what could go right or what could go not so right. BloombergNEF Summit taking place in London over the next 2 days, with the whole event being streamed live. Among the conversations, our very own Anna Edwards speaking with the European Commission Executive Vice President Teresa Ribera. You can follow that by hitting live on the Bloomberg terminal. And one of the conversations I know that Brussels is having is actually there's been so much focus on green. Could you now combine green and defense, because so much of the money is going into the defense industry? Up next, Bloomberg Brief, and this is Bloomberg.